money, your stories, your freedom. The Peter Schiff Show.
This is Peter Schiff here at SchiffRadio.com on this Thursday. Taking your calls live, 855-4-SCHIFF, 855-4-SCHIFF. This is the day supposedly the Occupy Wall Street movement is taking it to the streets. Apparently they've promised to disrupt the stock exchange, movement on the subways. We'll see what actually happens. I know we had a caller yesterday alerting me to this, and I read some more news stories about it overnight and this morning. We'll see if anything happens. Meanwhile, a lot of economic data coming out this morning, both before and after the markets open. We had housing starts declined a bit from a revised previous month, which is always the case. But again, you know, they're still constructing a lot of new homes, many of them being multifamily apartments. But I still think that we would be better off if we were starting fewer homes and building more factories or things of that nature. But unfortunately, that's not going on. We got the Philadelphia Fed for November. That was down to 3.6 from 8.7 in October. Also, we got news on mortgage delinquencies. In fact, foreclosures now, I think for the first time in a while, are starting to rise. 12.5% of all the mortgages outstanding are now in trouble. And, of course, that's with record low interest rates. Imagine what's going to happen to mortgage delinquencies when rates go up, or when we get even more upward pressure on prices due to inflation. In fact, I was watching on CNBC this morning. They had the Federal Reserve Bank of St. Louis President James Bullard, who was interviewed this morning, and he did acknowledge that inflation was a problem at 3.6% trailing, because he said, well, if you didn't get a raise last year, you've lost 3.6% of your purchasing power. Well, that's true, but, I mean, what if you did get a raise? Then you've lost the benefit of that raise. If you got a 3.6% raise, it doesn't mean that the inflation is not a problem. And what about people who had money in the bank? What about people's savings going down by 3.6%? It's just not the wage earner that is suffering from inflation. It's anybody who has dollars. And I think he even acknowledged that, well, commodity prices are now back on the rise, and therefore upward pressure will continue, which I believe. Now, we're having commodities down a little bit today. Oil prices are down about $1.80, but we're still above 100 at just under 101. You know, the catalyst for the sell-off in commodities and stocks today, although stocks are coming back, is more bad news out of Europe. You know, if you look at the yields now on Spanish and French debt, they are really moving up. I mean, not to Italian levels yet, but certainly moving up. In fact, the spread between German 10-year treasuries, or not treasuries, but German 10-year bonds and French 10-year is now at the highest level it's been since the formation of this single currency. So now this, you know, sovereign debt concerns spreading now even to France as this crisis seems to worsen. But at least what I'm hearing out of Germany is that there is no ECB solution a la what's going on in the UK and the US, meaning just printing money. In the short run, that is creating problems for the markets, but in the long run, that is the exact appropriate policy to make. So I think ultimately the Eurozone is going to benefit from the fact that they are not doing what the markets are demanding, which is the quantitative easing. Also, we got jobless claims that came out this morning. Actually, some good news there. Jobless claims down to 388,000. That's the lowest level since April. I think the economists were looking for about 395,000. In fact, the number of people on unemployment benefits is at a 3-year low. Now, I have a feeling part of that is because people no longer qualify for the benefits, so they don't have jobs. They just, you know, they've maxed out on their unemployment benefits. And of course, there are people who have taken jobs, but I think a lot of the jobs that have been created are not nearly as good as the jobs that have been destroyed. And so people might have jobs, but they have less in the way of purchasing power because they're earning less money. And of course, because inflation is making prices go up, they're earning less money and they're paying more for the things that they buy. So the economy is weakening even as fewer people are collecting unemployment. Yeah, I thought one of the big stories floating around from yesterday had to do with Newt Gingrich and Freddie and Fannie. And, every time somebody starts to rise in the polls, we find out some new negative about them. It's not a coincidence, obviously. The opposition research is there. It doesn't make any sense to attack an opponent who's low in the polls because you've got nothing to gain by doing that. In fact, if anything, you might help them because sometimes any publicity is good publicity when you're trying to get noticed. But once you're already noticed, then, of course, you want to, you rain down with the negative publicity. And Newt Gingrich, and it turns out, I think this is going to be pretty bad for the former Speaker of the House. It turns out that Newt Gingrich was paid between $1.6 and $1.8 million in 2006. And I'm not sure if he got all the money in '06 or if it was over a period of 2 or 3 years. Certainly $1.6 to $1.8 million is a lot of money to be paid by Freddie and Fannie. I'm not sure if it was Freddie or Fannie or both of them. But I certainly know that he was paid by one of those guys. And, of course, when the news first came out, the speaker said, well, they were paying me as a historian. A historian? Like, what is Freddie and Fannie? What do they need history lessons for? And if they want a history lesson, hey, you could buy one for a lot less than $1.6 million. There are a lot of history teachers out there that are working long hours. I'm sure could have used a few extra bucks. They could have come by Fannie and Freddie's office and taught them about history. I mean, I wonder what kind of history. Was it American history? European history? I mean, what kind of history were they interested in over there? I don't know. But anyway, then he said, well, it wasn't really history. They wanted my advice on the mortgage market and the housing market. And, of course, I told them it was a huge bubble that was going to burst. Yeah, I don't buy that for 1 second. First of all, they didn't need to pay the speaker $1.6 million. All they had to do is look me up on YouTube and watch my mortgage banker speech. I told them exactly what the problems were in the housing market. In fact, I had been peppering the Internet for years, since 2004, with articles about how the housing market is going to implode and how Freddie and Fannie are going to go broke. So if they wanted somebody to educate them on the perils of the housing market, they didn't have to pay $1.6 million to Newt Gingrich. And, of course, I don't believe it for a second that Newt Gingrich warned Freddie and Fannie about anything. In fact, if he was warning about the housing problems back in 2006, show me the proof. Where is the Newt Gingrich was right video? Where are the articles he wrote? Where are the speeches? Show me something that the speaker had a clue that a housing collapse was imminent, let alone that he knew enough about it that he could charge Freddie and Fannie $1.6 million. No, the real reason, well, we'll talk about the real reason that Newt Gingrich collected $1.6 to $1.8 million from Freddie and Fannie when we get back. So stick around. You're listening to the Peter Schiff Show here at SchiffRadio.com.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million. Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back. This is Peter Schiff here at SchiffRadio.com. Anyway, it is Freddie Mac, apparently, is the agency or quasi-government agency that paid the former speaker, Newt Gingrich, not Fannie Mae. So Freddie Mac paid $1.6 or $1.8 million, somewhere in there, to Newt Gingrich. Now, obviously, they didn't pay him, as the speaker suggests, for a history lesson. He might know history, but he don't know that much history. And even if he did, it's not worth that much money. They didn't pay him for advice on the housing market. Why? What does he know about the housing market or the mortgage market? Nothing. The only thing that Newt Gingrich had to offer that was worth $1.6 million was influence peddling. That's what he did. See, what Freddie Mac wanted was somebody to go to Washington who had connections, especially with Republicans, because at the time back in '06, there was some effort on the part of some Republicans to try to maybe rein in Freddie Mac, and so they paid Newt Gingrich this massive amount of money for his influence to go to his former colleagues and try to educate or brainwash them, persuade them into backing off, into trying to accept the value of this quasi-government agency. That's what they were buying. And, the fact that he had the gall, and, of course, I think he was right to say that Chris Dodd and Barney Frank should go to jail. But then again, probably so should Newt Gingrich. I mean, talk about hypocrisy. That is the ultimate in hypocrisy. When you're calling out other people for being on the take by Freddie or Fannie, and then you're on the take by the same company. I think this is going to do a lot of damage to the speaker. There is no way he can get around having taken so much money from these entities. There's only one explanation for how he could have done it. So he was therefore part of the problem. He is one of the reasons that we had a housing bubble, because he was there working behind the scenes to make sure that Fannie and Freddie were able to do the damage that they did with government protection. So I think this is going to be a big deal for the speaker. Also, more news on Freddie and Fannie is the huge bonuses that are being paid to their executives. Of course, there is no excuse for this. When these were supposedly market-based companies where you had shareholders who had some kind of say over what their executives were paid, and the executives were paid bonuses based on the profitability of the company, that was one thing. Now, of course, a lot of the profits were phony, and I think there should be big clawbacks. I think guys like Franklin Rain should have to cough up a lot of the money that they were paid over the years that obviously wasn't deserved. But that's another argument. But at this point, there is no excuse for paying anybody a large bonus at Freddie and Fannie when there are no shareholders. These are now government agencies, and they are not accountable to anybody. How they can pay anybody at Freddie and Fannie more than the President of the United States doesn't make any sense, because these are not managers. These are bureaucrats now who are running Freddie and Fannie. They work for the government, and there is no profit. They are still bleeding red ink. They are losing billions and billions of dollars. On what basis should they be paid bonuses? I guess they're going to try the old Obama line. Well, if it wasn't for us, the losses would have been even bigger, right? Hey, it could have been worse, so give us bonuses because we didn't lose billions more, right? That's Obama's line. Hey, it would have been worse. Yes, the economy's a wreck, but hey, if it wasn't for my policies, things would have been even worse. I guess that's a consistent line now coming out of the government. Pay me because it could have been worse. Anyway, hey, before I go to the phones, real quickly, got to mention Ron Paul, now number 2 in New Hampshire poll as well. He's Mitt Romney was number 1, but Ron Paul solidly in number 2. In fact, he's now in number 2 position in the 2 first primaries in New Hampshire and in Iowa. Ron Paul is the number 2 position. So I think if you put them together, maybe he's the front runner at this point, but still, nothing about Ron Paul in the media, despite the fact that he is number 2 in Iowa, number 2 in New Hampshire. And both Iowa and New Hampshire don't have the same number 1. The person who's Ron Paul in New Hampshire is ahead of the number 1 in Iowa. And in Iowa, as number 2, Ron Paul is ahead of the guy who's running in New Hampshire. Anyway, let's go to the phones. On hold is Brandon calling from Georgia. Brandon, welcome to the show.
Hello, Mr. Schiff. It's a great honor speaking with you. I've been listening for 2 years now, and you got my interest into economics. I have a question I wanted to ask you about investing. I'm interested in starting to invest, but I wanted to know if you recommend any books or anything that could get me into that field.
Of course, my books, Crash Proof 2.0. You could pick it out. It just came out in paperback. Get that book. You can also get the book I wrote, The Little Book of Bull Moves. Those are 2 good books that have a lot of information on investing, so start with those.
How long do you think it would take me to grasp the basic fundamentals of investing?
Oh, not long. The fundamentals are pretty simple. The problem is you have so many people trying to overcomplicate them, but it actually is pretty simple, and I think you'll have no problem grasping the concepts. But anyway, thank you for the call. See if I can squeeze in Chris from Chicago. Chris, you're on.
How you doing, Peter?
Good.
The first week it was the first or second week you had started the show up, you had a guest on by the name of Adrian Douglas from Market Force Analysis. Do you remember him?
The name sounds familiar. Couldn't say I remember what we discussed.
He's a gentleman that believes in a lot of this paper shorting out on the COMEX and, the manipulated gold prices despite the higher prices over the last decade. Now, I've been following him for 10 years, and basically starting last week and every day since last week, since 1800, he's been pounding the table that gold was going much lower and silver much lower. 1,628 he's calling for. And I would just love for you to have him on again to explain in further detail. You guys talk for about 15 minutes about how he comes up with this. Here's a guy who's been on it like you since 250, 300, who can tell by the options out there on the COMEX what J.P. Morgan and what the larger banks have to gain by driving the prices lower. And this is just the other side of the story.
Well, I don't know. Could gold? A move down to 1620. Is not a spectacular move. I'm certainly, it certainly is within the realm of realistic possibilities that gold could go down there. So I don't know that there's anything fantastic about a call like that. Maybe he'll be right, maybe he'll be wrong, but certainly is not something that's kind of like a crazy call that given where gold is now.
It's between being long and ultra long, and I understand that. But the point is, he's calling it for by next Wednesday on expiration. And just be nice to get your guests to be aware of what happens on these COMEX.
Yeah, well, obviously, if that actually happens and you bet on it, you can make a lot of money. It's not, that's a big move in less than a week. And if there's options expiring and you buy put options that are practically worthless now, somebody can make a lot of money if that actually were to happen. But I think the odds are that it won't happen, and therefore people trying to bet on that outcome instead of making a lot of money will just lose what they wager. But of course, who knows? We'll see. Maybe he's making the bet. I don't know.
No, he's not at all. He makes a distinction. Again, Peter, it's a paid subscription. He's making a distinction just between being ultra long and long. That's all he's saying. And just from a guy that calls from 300, I understand your investment thesis. Buy now, and if it goes down, buy more. Right? It's better to get lower prices, and I'm hoping for lower prices. I'm not getting short. I'm just.
A better way for somebody, if you think that you're going to have some downward pressure, you might look for that dip as a buying opportunity. You might, sell some puts if we get that dip and take in some premium. Or if you wanted to, if you were long now, you can sell some calls that were going to expire in a week, and then you'd collect that premium. So there are ways, more responsible ways if you actually think that's going to happen. But again, nobody knows for sure what's going to happen. You can look at a chart and you can make your best guess. But no one knows for sure, so there's a lot of risk. Anyway, hey, thanks for calling up. We got an interesting debate coming up. Economist and author Warren Mosler joins the show when we get back. It should be quite a bit of a debate. We even debated a little bit. He was a Senate candidate here in Connecticut when I ran in 2010. So it'll be an interesting half hour. Don't miss it. We'll be right back on SchiffRadio.com.
The Peter Schiff Show. We now return to the Peter Schiff Show. Call in now, 855-4-SCHIFF. That's 855-472-4433. Rebel Radio, the Peter Schiff Show.
This is Peter Schiff here at SchiffRadio.com. And joining the program now is Warren Mosler, who is an American economist. He's also the president and founder of Mosler Automotive, which is an American supercar manufacturer based in Florida, founded back in 1985. He's also the co-founder of the Center for Full Employment and Price Stability at the University of Missouri, Kansas City. He's also an author. He wrote a book, The 7 Deadly Innocent Frauds of Economic Policy. He writes a blog at MoslerEconomics.com. And actually, he was a candidate for the U.S. Senate here in Connecticut when I ran. Of course, I ran in the Republican primary. He ran independent. So he actually was on the ballot throughout the entire race. I dropped out after I lost in the primary. But the two of us did at least a couple of occasions, I remember, Warren, that we shared a podium in debates here in Connecticut. So I welcome you to the show.
Yes, hi. And the car company's about to be sold. So
who's buying it?
A friend of mine who lives in Washington now. And
okay, so it's staying in America.
Yeah, it's in Riviera Beach. I'm down to like 3 employees right now. Sales cars are fast, but sales are slow. And,
how many? Well, what was your heyday? How many did you employ at one time?
Probably 30 or 40 people, and maybe 10 or 12 cars a year. You know, we shot for 1 a month while the orders were good. Mm-hmm.
Yeah. How much does a supercar run?
The new one,
as far as cost,
$385,000 for the new Photon, which just set a bunch of performance records, won the Car and Driver Lightning Lap, that kind of thing.
Do you drive one of those?
Not down here in St. Croix. I moved down here in 2003. I drive one of my little Consigliers down here, which is a...
Oh, so you don't live in Connecticut anymore?
No, I actually never lived there. I just came up for the summer to run for office when some people at the Independent Party asked me to run.
But you didn't have to live here to run?
No,
I thought you had to be a citizen of the state.
No, the Constitution says you have to inhabit the state when you take office.
Oh, only when you... So I didn't know that. So I can move to Florida like you to get out of all these taxes and I can still run, huh?
St. Croix here, marginal tax rate is 4%, U.S.
Oh, okay. I thought you're down. You're not down. That's right. That's not Florida, but I could live in Florida where it's 0. But anyway, so
taxes. This is income tax, marginal income tax rate under the...
Yeah, that's what I'm talking about.
In Florida, 0 for income taxes?
Yeah, they don't have an income tax in Florida.
No, it's federal. My federal tax rate here is 4%.
How is that?
It's called the EDC program. It's a development program sponsored by Department of Interior, the U.S. government, trying to get people to move down here. And if you have a qualifying business, you qualify for a 90% deduction in your federal taxes.
How do you qualify?
It has to be VI source income, and that's about it. You need 10 employees, and you qualify. And you can,
but as long as you earn all your income there?
Yeah, it has to be sourced here. So if you're on the phone here trading, it's VI source income. That's fine.
Oh, if you're running a brokerage firm or a asset management firm, even if you're managing assets all around the world, as long as you're doing it from the Virgin Islands, you don't have to pay the taxes.
That's correct. Yeah.
Yeah. See, too bad we don't have that here state-wise. So I got to look into that a little more. I don't know why. We're going over to Singapore with some asset management, but. I didn't even realize that you got that kind of a break. I don't know. Maybe I missed the boat on that. I got to look into that. But anyway, instead of just talking about that, I want to talk a little bit more about your economic ideas, because I remember one of the things that you and I argued with during the debate was the debt and the Federal Reserve, and you are of the opinion that all of the worry over the deficit is misplaced. You don't think the deficit's a problem at all, right? You think the bigger the better, right? You think we should just print a bunch of money, although I don't want to put words in your mouth, so I want to let you describe it. But I think you want more deficits and more money printing. Is that correct?
Okay, my turn?
Yeah, go ahead.
Yeah. Okay, look, the deficit is not a solvency issue. It's not a burden on the next generation. And, of course, inflation comes from excess spending. When you go out and buy things, you drive up the price. And so if the government spends a lot more than it taxes to the point where it's driving up prices, then it's causing inflation. So, and you've got to look at the way I like to explain it is like all government spending with today's monetary system is what you might call printing money, and taxing is what you might call unprinting money. And the trick is to get the balance right so that we're at stable prices and full employment. So
I'm still not following you here. If the government spends money, unless the Federal Reserve creates the money for them to spend, the only way the federal government can spend money is by taxing somebody else. And so it's not necessarily inflationary because the federal government is spending money that somebody else would have spent but now can't because the government has taken the money in taxes. It's only when the Federal Reserve monetizes it, when the government spends money that it doesn't collect in taxes, and then the Federal Reserve prints the additional money, that's where the inflation comes from, not from the spending itself, but from the way the spending is financed via a printing press.
Okay, so you string a lot of things together here. I don't know if we can start from the beginning. But when government spends, what the Federal Reserve does is it credits the account of whoever it bought the thing from. So if it buys something, an aircraft carrier for $5 billion, it credits to the account of whoever sold the aircraft carrier. And the Federal Reserve, when anyone spends money, what you do is you give the Federal Reserve instructions, wire instructions, to debit your account and credit the other person's account. Now, you can call that printing money if you want. But the Federal Reserve...
Well, that's what we call it, even though they're not printing it. But if the federal government taxes me and then spends that money. The Federal Reserve is not involved in that. I mean, the government takes the money from me in taxes, let's say income taxes, and then it spends it. The Federal Reserve comes into being when the government wants to spend money it doesn't have.
All right. So, look, if you were to pay your taxes with actual cash to the Fed somehow, I mean, it's problematic. They would give you a receipt and say, thank you very much, you just paid your taxes, and now you've helped pay for Afghanistan and Social Security. And then they take that cash.
Oh, I know. Okay, yes, it is going through the banking systems. Yes, so money is going from my bank account to the Treasury's bank account. Okay, yes, I got you there. But
it's like the scorekeeper in a card game. Okay, how many points does the scorekeeper have? Well, he doesn't have any points. Well, then how does he give you 100 points if you win the hand? Does he have 100 less? No. Or if he takes 100 points from somebody else for a bad hand, does he have 100 more? No. Okay, the Federal Reserve is the scorekeeper. The dollar is just a spreadsheet. And so when you pay taxes, they reduce the number in your account, but the Fed doesn't get anything. And they can credit people's accounts, but they don't lose anything. They are the scorekeeper. When you kick a field goal, where does that 3 points come from? Where does a stadium get those 3 points? We know that you got to run it on the field.
But how do you get from that to saying that the deficits don't matter and we can print money and there's not going to be a downside to it as far as inflation?
Yeah, I did not say deficits don't matter. Okay, I didn't say that. I said there's no solvency issue. The government can't run out of money. There is no such thing any more than the scorekeeper.
Well, yes,
so we all
right. They can't run out of money, but the problem is the money can run out of value. That's what's important. Yes, the Fed, there's no limit to how much money they can roll off the printing presses. Right. The question is, what can we buy with that money? And if they print enough of it, we won't be able to buy anything because they will render it worthless.
Right. So the thing is, when the government buys things, it can drive up prices and render the money worthless. It can do that. It can spend too much and render the money worthless. Or it can spend too little and... Now, look, none of my proposals are for more government spending, so don't get me wrong here.
All right. Well, what is your proposal? I mean, given the state of the economy today, what do you think the government should be doing, and what do you think the Fed should be doing?
Okay. Well, the government I think we should suspend all FICA taxes right now. Just stop taking this money out of people's paychecks who are working for a living, so that American capitalism can work the way it's supposed to work, and that is people working for a living are supposed to have enough money to buy back the products they produce. And
okay,
right now,
so we do that. How if we do that? I'm not sure how much we collect in the FICA tax. It's a lot, right? When you take both. You're talking about both portions, right? Not just what the employee pays directly, but the employers.
Sides. Now, when you take
so that's.
When you cut taxes,
and you're talking about the Medicare tax too. So you're talking about 15% of payroll.
Yeah, the total. Now there's been some cuts, minor cuts, but the total is about in a decent economy was running about $1 trillion a year. Now,
is this a permanent cut or just a temporary cut?
Well, let's say you do the cut and then you play it by ear. I think it'll wind up permanent. Now, if it results in overspending that causes inflation, then we would need to look. Taxes reduce aggregate demand. Taxes take away our money. They take away our spending power. The purpose of taxes,
right? But if you eliminate that payroll tax, where is the government going to get? Where is the government going to get the money to make all the Social Security payments or to make all the Medicare payments if you eliminate the tax source funding it?
Exactly, and that's the insight for MMT, that spending and taxing are not operationally connected. There's no operational connect. The guy spending the money, making the Social Security payments, all he's doing. When I get my check, my Social Security payment, my bank account goes from $4,000 to $5,000. All the guys. Yeah,
but where's the government going to get the money to pay the Social Security benefits if it's not collecting the taxes?
Right. The same place the scorekeeper gets the money when he changes your score up. The same place the football stadium gets the 3 points. It's where all government spending comes from. There's no distinction here. Okay.
So what you think what you're saying is that we'll just run bigger deficits that will be monetized by the Federal Reserve.
Well, I didn't say that's your words, monetized by the Federal Reserve. The monetized is a term from fixed exchange rates. It doesn't apply to our current system.
Right, but if the government, if you're going to take right now, the government is collecting
the deficit would.
Yeah, the government is collecting $2.2 trillion in taxes. Under your plan, they might only collect, I don't know, $1.4 trillion. I'm not sure the exact amount, but they're still going to be spending the same amount.
Correct.
So now, don't you think all this extra money printing is going to cause prices to go through the roof for food and energy and pretty much everything?
Right. All this extra spending by people working for a living will support prices and it will support GDP. But we get a lot of positive supply side things as things pick up. You get economies of scale and you get
But what's going to pick
signal.
up? People are just going to – the trade deficit is going to go through the roof, which is already $50 billion. As people get more money to spend, they're going to buy more imported products. Trade deficit goes through the roof. The dollar plunges. Prices – I mean, this is a great strategy for my portfolio. But
too many dots here. First of all, I think you and I agree that imports are benefits and exports – real benefits and exports are real costs, because I think we agreed on that in our last conversation. So the fact that the rest of the world wants to send us real goods and services in return for data entry on the Fed's computer is actually a benefit for us, and that's why
but I don't think they're going to want to do that. If our deficits go through the roof and the dollar starts to plunge, we run the risk of accelerating the demise of the dollar's position as the world's reserve currency.
Okay, well, again, you're stringing a lot of things together. They
need to be strung together. That's the problem.
Well, I'll start from the back because that's the way I'm remembering it. But the idea of being a reserve currency only means that other nations are looking to export to the U.S., so they're willing to sell us.
I know, and we get the benefit of that subsidy. But, well, look, I want to compose your thoughts. We got a break. We got a commercial break, so we're going to pick this up when we get back. You're listening to The Peter Schiff Show here at SchiffRadio.com.
The Peter Schiff Show. To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America. We're sorry. Peter Schiff is back on the air.
And this is Peter Schiff speaking with economist, author, and former United States Senate candidate Warren Mosler. And Warren, before the break, you were trying to explain to me how it is that we can slash tax revenues, run the deficit through the roof, and somehow this is going to create economic prosperity without any negative side effects.
Right. Okay. Well, let's just one thing you said was that when we were to cut the FICA tax, which I said let's just suspend it, that we would import more, and I agreed, saying imports were a good thing, and you said, well, that would make the dollar go down, which I think you were thinking would mean we would import less. But again, we can't have it both ways, and yes, we would import more. Okay, so let me get back.
What we might end up doing is paying a lot more for what we import. So we can the price of the imports could go up, and so we won't necessarily import that much more, but we'll pay more for what we import.
Right. Well, the presumption is, I thought of your question was the quantity would go up. But look, anyway, the problem is now, it's not that this stimulates and gets us to prosperity. It's the current fiscal balance is blocking, it's restricting the normal prosperity that normal competitive markets would result in. Okay, and so if the government didn't have this massive restriction on right now with its monetary system, we'd be extremely prosperous. There's no shortage of housing. There's no labor shortage. There's no shortage of food.
Well, no, there is no shortage of housing.
Pardon me?
But don't you think the government is almost spending $4 trillion a year?
Yeah.
And that's an enormous burden on the economy. And under your strategy, that spending isn't reduced. That's still there. That's a big barrier to this economy.
And here's why. Okay, we have a lot of what's called unspent income in this country, and it's technically you call it demand leakage. And what happens is a very large portion of everybody's income goes into their pension funds, IRA, insurance reserves, all kinds of things. Okay, and so you've got people in general spending, having part of their income just put away where it never gets spent, and those numbers.
Well, isn't that called savings? Are you saying that savings is a waste, that is leakage, that money that is saved does nothing to grow the economy, that we should just spend everything we earn and have no savings at all?
No, I didn't say that. Look, what I'm saying.
Well, then how is savings leakage?
Okay, well, when you start using the word savings, I'm using the word not spending income, okay? We have income that we don't spend. And the way,
I know. That's the money we save.
Right. But the way
if we don't spend it, we save it, by definition.
The way the economy works is for the output to get sold, all the income has to be spent. And it gets spent between capital goods, investment goods, and consumer goods. But
but the spending on capital goods is financed through investment, through savings.
All right. Let's back up. Just slow down.
Yeah.
Okay. For the output to get sold, $16 trillion or whatever, that creates $16 trillion of income to somebody, and that has to get spent. And so if you've got, exactly $16 trillion to the penny or whatever GDP happens to be. Now, if part of that, if someone's spending less than their income, some other sector or some other entity has to be spending more of their income, or that output doesn't get sold. And if it doesn't get sold, it doesn't get produced, and there are no jobs, and and there's no production. So the output has to, any output, any GDP report, it has been sold. And anybody who spends less than his income, some other entity, some other sector has to spend more. Okay, and that's
well, right. Well, yes, but no, not spend more, invest more. The money that is saved is financing capital investment, which is leading to production.
Sorry, let's not go too
well,
far.
Look, here's a question I got to ask you. If you're right, if what you're saying is true, that if we just eliminate the payroll tax, and then that's going to be good for the economy, then why stop with the payroll tax? Eliminate the income tax, too. Just eliminate all taxes and let the government just print whatever it spends. I mean, wouldn't that be even better?
Well, you have to. What we want to do is offset the unspent income. Okay, so if there's not enough income being spent, how do you fill that spending gap? And one way to do that is to just stop taking money out of people's pockets who are working for a living to fill the spending gap. Now, think of taxes as the thermostat on the wall. If you get them too low, and zero would certainly be too low, you get hyperinflation. The currency is absolutely worthless. If you get them too high, we move too much money, and output goes unsold.
But I think if we follow your plan, that's the logical conclusion. That's what we're going to have. We're going to render our money worthless.
My plan is for any given size government. Now, you might think it's too large, and somebody else might think it's too small. But for any given size government, there's an optimal level of taxation that results in full employment, and relatively full employment, and relatively stable prices. And
that might be true, and I think that optimal level is relatively low. But you have to balance the budget. Whatever that optimal level of spending should be, it should be financed with taxes, not with a printing press, not with debt.
Yeah, well, there is no, the printing press and all that. That's all fixed exchange rate stuff. But I understand what you're saying. And look, the thing is, when we have an economy where we have, again, it's government interference. We've got automatic, tax advantage reasons not to spend income by the trillions and trillions. We've got 16 trillion or 20 trillion.
Unfortunately, we have more reasons not to invest it here, but to invest it abroad. I mean, you're a living proof there. You've hightailed it to the Virgin Islands to escape these high taxes.
Well, the Virgin Islands is the U.S. territory, U.S. government, U.S. passports, U.S.
I know, but you're there for the tax break, right? It's the taxes that got you there.
Well,
you wanted to get away from these taxes, so that's the problem. Well, the problem is government is too big.
The federal government is using this tax rate to try and give us an incentive to come down here, and not too many of us have done it.
I know, well, but the high taxes are a disincentive to stay here. That's the problem. And the problem is we got this huge government, and your plan doesn't do anything to shrink government. In fact, it removes all the impediments for government to get bigger. If they could just print money and spend it without having to collect taxes, imagine how much more they'd spend. At least with some taxes, there's some restraint. People don't want more taxes.
Well, the rest of I've got lots of proposals to reduce the size of government, but,
well, that's what we need. Let's do that.
Yeah, but
those are the proposals that we need to enact.
For whatever size government we have, based on the current institutional structure, which is our pension system and everything else, and the lack of domestic credit right now, for whatever reason, the right level of taxes happens to be a lot lower than spending, and the deficit does not present any solvency problem. It's not like I
disagree. And yes, it's not a solvency issue because we borrow in our own currency, but it's a purchasing power and inflation issue. And if we destroy the dollar, we destroy the economy. That is the problem. So the government can't spend more than it collects in taxes. And if you think taxes are too high, and I agree, we need a lot less spending because that's the only way to really bring taxes down. Because I don't want to replace taxation with inflation. That's what your plan does, unfortunately. But anyway, hey, thanks for the show. It's an interesting discussion. Everybody else, we got a full hour coming up here on the Peter Schiff Show. Stick around. You're listening to SchiffRadio.com, the gold standard in talk radio.
The Peter Schiff Show.
So sad and blue. You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
Call in now. 855-4-SCHIFF.
That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories,
your freedom.
The Peter Schiff Show.
Welcome back, everybody. Hour 2 of the Peter Schiff Show is underway now. We are taking your calls. We've got open boards. 855-4-SCHIFF is the number to call. 855-4-SCHIFF. You know, I think the problem with the last interview I had with Warren Mosler, he's a very intelligent guy, but, you know, it shows that even intelligent people can have some very, I guess, unintelligent thoughts that, you know, we can simply print money and there's no adverse consequence to that the government doesn't have to collect taxes. It can simply spend money. If that really were the case, and if we really could eliminate the payroll tax without any adverse consequences, then why not eliminate all taxes? Obviously, at some point, Warren would have to conclude that there'd be some adverse consequences. I wonder what those adverse consequences would be. And if there are adverse consequences to eliminating all the taxes without cutting spending, then there are adverse consequences to eliminating the payroll tax without cutting spending. In fact, if there weren't adverse consequences to printing money and spending it, then that's how the Founding Fathers would have structured the country. They simply would have said the federal government shall print whatever money it needs to pay the expense of the United States. Why even give them the power to tax? Just create money. But in any event, it was a interesting conversation nonetheless. And unfortunately, there is a growing consensus out there that the deficits don't matter, that the deficits should be bigger. In fact, we already did reduce payroll taxes. We didn't completely eliminate them, but we reduced them and we ran up the deficits. And I would argue that that is not working. And if we simply do it on a bigger scale, which is the Paul Krugman argument, I don't think that that's going to work any better. I just think the negative consequences will be even stronger. And it is very important. You know, we have to, if we tell the world that we're just going to run big deficits in perpetuity and constantly debase our currency, then it won't be the reserve currency. It will plunge, and we're not going to be able to import anything. I mean, we'll import something, but we're going to pay through the nose for it. That's where all our imports are going to go, just to, buying skyrocketing prices. So let's hope we don't have to experience the consequence of what he was suggesting. But unfortunately, I think we are going to. I think the deficits are going to get bigger and bigger. The Fed is going to create more and more money to finance them, and we are going to suffer what should be very, very predictable consequences. You know, along those lines, I read an article yesterday that China has just increased its holdings in the last month of longer-term U.S. Treasuries. Now, it had been buying or reducing the maturity of its debt, but in the last month or so, it bought another $20.7 billion in notes and bonds, raising its total holdings of long-term U.S. Treasuries to $1.14 trillion. That is a lot of long-term treasuries. Of course, China has over $2 trillion worth of debt instruments. A lot of that is shorter-term bills, and of course, a lot of mortgage products, a lot of Freddie and Fannie debt owned by the Chinese government. So they have a lot more than that. But the fact is, they did pick up their buying on the long end. I'm not really sure why they would do that. Maybe they thought it was necessary to prop up the Treasury bond market, prop up the U.S. economy, but they are flushing a lot of good money after bad. Anyway, you know, I want to play a little sound. We got a lot of clips here, but I want to focus on one in particular from CNBC. This is yesterday. This is a discussion with Steve Leisman and Alan Krueger, who is the president's top economic advisor, and one in particular where Steve Leisman is asking Krueger if he thought that the government should allow the market to set housing prices. Gee, what a novel idea to have capitalism in housing, and let's let the free market determine what the price of a house should be. And let's listen to his response. This is cut number 4.
Republicans seem to have this attitude that the way to fix the housing market is to let it hit bottom and to let the market do its job. Is that the view of the administration on housing?
I don't agree with that view. I think that the crisis began with the housing market because of the enormous run-up in home prices and then the big drop. And I think one can draw a pretty direct connection between the sluggishness of the recovery and the legacy of the housing market problems.
So what is his point there? What is the connection between the sluggishness in the economy and the housing problems have to do with whether or not the market and not government bureaucrats should try to set home prices? Now, it seems that he is trying to extrapolate on the fact that the problem was that prices ran up and then they came back down, and that was the fault of the market. And therefore, if the government was more involved, that either prices wouldn't have gone up or they wouldn't have come down. But that somehow to say that the housing bubble was the fault of the market determining prices and that therefore the government should do it instead is absurd, because it doesn't look at the fact that it was government policy, not the free market, that was the reason that prices went up so much in the first place. If the government wasn't trying to influence home prices with subsidies, if the government wasn't guaranteeing mortgages through Fannie and Freddie, if the government wasn't encouraging banks to make loans to minorities regardless of their ability to repay the loans, if the government through the FHA wasn't allowing people to buy homes with 3.5% down, and in many cases they didn't put anything down because there was all sorts of fraud where the sellers were actually giving the buyers the down payment money, meaning that they had no skin in the game and had no aversion to paying over prices for homes that were constructed very shoddily. So the run-up was entirely due to government manipulation and government influence. Had we had a free market in housing, we wouldn't have had the big run-up. He admits himself that the run-up was part of the problem. Well, government was a major factor driving higher home prices. But yes, the problem was home prices went up. That's correct. And now bringing them back down is correcting that problem. Well, if you recognize that home prices going up was a problem, then having them go down is fixing that problem. Why would you want to stop prices from going down if you just admitted that prices going up was part of the problem? If they haven't gone down low enough, why should the government intervene to try to keep home prices at a level that's higher than where they should be? Doesn't that create problems? If the government is going to set home prices artificially high, doesn't that create some sort of a problem? Isn't that the reason that the government shouldn't be fixing prices for anything? We want a market clearing price. If the government is trying to preserve artificially high home prices, that is going to come at a cost, and it's going to hurt the economy. Anyway, we will be back. We're going to take your calls. 855-4-SCHIFT. Still have open lines if you want to call up. We've got a lot of program left to go, so don't be shy about calling. We will be back with your calls and more of the Peter Schiff Show, so stick around.
The Peter Schiff Show.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry. Peter Schiff is back on the air.
Welcome back, everybody. It's Peter Schiff here at SchiffRadio.com. Obviously, the guys over at Radio America have got some kind of problem here. We shouldn't even be playing these clips at all, let alone the same Peter Schiff minute we played yesterday. Those are clips that are supposed to run on other shows, kind of to promote this radio show. And I basically record one of those every day. I recorded one yesterday that should be playing today on, I think it was on the post office is what I did yesterday's on. But anyway, they shouldn't be on our show. But anyway, let me go back. I want to play a little bit more and then go to your calls. We got a lot of calls now on hold. I want to play a little bit more from the CNBC interview yesterday with Steve Leisman and Kruger, the president's economic advisor. First, he's asking him about the jobs plan and on why he thinks we need to pass it. Let's take a listen to cut number 7.
I think for a couple of important reasons, it's critical that the Jobs Act be passed. First, if you look at the world economy today, there are certain risks that we face. The severe concerns about Europe. One of the ways in which Europe affects us, if they have a slowdown, it affects our exports. If that's the case, then we need to strengthen demand for our products right here. So that makes passing the Jobs Act very important.
Okay, well, two things are problematic here. First of all, he's saying that we need to we need to learn a lesson from the situation in Europe. Europe is having a problem, and therefore we need to pass this Job Act. Well, why is Europe having a problem? They're having a problem because they have too much debt. Well, if that's the case, we shouldn't pass the jobs plan because all it does is run up the debt. And so if Europe is having a crisis because they have too much debt, why should we emulate those actions that led to that crisis? Maybe we should say, oh, no, look what's happening in Europe. We better cut back on our deficits so the same thing doesn't happen here. Also, he's talking about the slowdown and how it might affect our exports. And therefore, we have to increase demand for our own products. What are the products he's talking about? You know, if you cut the payroll tax and Americans have more money to spend, most of what they're going to spend on is a lot of that's going to be imported products. We're just going to run up, we're going to buy more foreign products, not our own products. So that just runs up the trade deficit. It doesn't necessarily improve our exports because we run bigger deficits. In fact, if anything, it might weaken our ability to produce things because the government is going to be crowding out more investment capital with bigger deficits. But anyway, he continues this with cut number 8. Let's play that.
In addition, we have components of the Recovery Act phasing out, and we also have the payroll tax cut that was passed at the end of last year phasing out. If the Jobs Act isn't passed, then the typical American family would see a $1,000 increase in payroll taxes at a time when the economy needs families to have more after-tax income so they can go out and support the economy and rebuild their balance sheets.
Well, the truth is, if the economy needs more after-tax income in people's pockets, then we better cut government spending, right? If you're saying that we're taking too much money away from the typical American and he needs to have more money so that the economy can grow, well, then we have to stop taking money away from him, which means we got to reduce government spending. We can't simply cut taxes yet continue the spending anyway as if we were still collecting the taxes because that doesn't relieve the burden. Now, of course, Warren Mosler is going to say, yeah, do that, right? But no, if the government's not collecting the money in taxes, the Fed is creating it out of thin air, and so people are paying for it with a reduction in the value of their savings and their income. So, yes, they have a little bit more income because they're not paying as much in taxes, but they don't have the purchasing power because now whatever they need to buy is going to be that much more expensive than it otherwise would have been because the money they're earning has less value because more of it had to be printed to replace the lost tax revenue. Anyway, let me go to the phones. Greg, did you hear the discussion? Did you hear the clips that I played about the Jobs Act and Krugman and all that?
Yeah, I heard all that.
All right, I don't know. All right,
Okay,
for some reason I had my volume down, but anyway, go ahead.
Yeah, no, it's an honor to be on your show. I've actually got my own radio show here in Tucson, and I try to spread a lot of your economic propaganda, and I love it. But one thing or one analogy that I've gotten a lot of legs off, or a lot of legs with liberals, is to explain the economy like an ecosystem. Since liberals like the environment, I mean, if you say, well, what would happen if you took out a portion of that ecosystem, even if it were something you didn't like say mosquitoes or something like that? And they go, wow, well, the ecosystem would collapse. That would cause a ripple effect throughout the whole thing. And I say, yeah, well, that's the same thing that would happen in any sector of the economy that the government manipulates. So I just wanted to know if you thought that was a valid analogy, or what are some analogies that you would use to explain economics specifically to liberals?
Well, I use a lot of analogies. I mean, a good thing is, maybe they can read my book, How an Economy Grows and Why It Crashes, because there's a lot of simple explanations there that a lot of people would be able to understand. I mean, I try to use analogies as often as I can because sometimes they're more easy to understand. But yeah, I mean, the liberals often don't look at the unintended consequences of their policies. Warren Mosler was accusing me of connecting all these dots. Exactly. That's what you have to do. You have to connect the dots and see where you end up. The liberals never connect the dots. That's the problem. And so they pass a plan and they expect one thing, but they get the opposite because they didn't realize how all the dots got connected and where you end up.
Yeah, I mean, I just think it's astonishing how they can connect the dots so well when it comes to certain things like the environment, but not the economy. So just want to throw that out there. But, yeah, I do appreciate
I don't even know that they connect the dots well with the environment either. So I think their dot connecting skills are pretty poor regardless. I think maybe in the environment they connect dots that don't even exist. They make up the dots.
But I guess the intent is there. So, if you can win some hearts, and maybe you can win some minds too. So I appreciate it.
All right. Thank you for your call. Next up is Tony calling from Las Vegas. Tony, welcome to the show.
Oh, thanks for having me. Wanted to talk a little bit. What do you think is going on with silver? I can't figure out how one thing, the stock market or the price of the dollar index, it just doesn't seem to make sense what's going on with the precious metals market.
Well, I mean, you mean because silver is not going up right now, or was that what's causing you confusion?
Yeah, no, it's not. Do you think the price of silver?
Yeah, I mean, look, the price is not going to go up every day. I mean, what's amazing to me is it's not a lot higher than it already is because a lot of people still don't understand what's going on. But I think what's keeping silver from rising right now is the relative strength of the dollar versus other currencies, and so that's keeping silver from really going up. But I think once the dollar starts to fall, I think you're going to see a much bigger rise in silver. And I mean fall versus other currencies. Anyway, I don't know if you have. If you can stick on, hold on. We'll be right back. We got more of the Peter Schiff Show coming up.
I never seem to know what you are thinking.
The Peter Schiff Show.
And if a fella looks at you, it's for sure your little eye will be a-winking.
We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
Rebel Radio, the Peter Schiff Show.
And this is Peter Schiff here at schiffradio.com. We are taking your calls live, 855-4-SCHIFF, 855-4-SCHIFF. I did try doing the dialing last night. I didn't get too many calls for Ron Paul. I did a couple. I didn't get started till late at night. It was different than what I expected, so I had to call up the campaign because it's not exactly what I did. When I did the phone banking, the idea was the people that were phone banking were going to try to sell me and talk to the people that answered the phone. They were going to talk about Peter Schiff. That's not what's going on here with the volunteer effort. So what the strategy here, and I talked to them, is that the people who are volunteering through this phone banking, what they're doing is just gathering information. So you're really calling up and taking a survey, and you're asking questions. Who do you support in the president race? Who's your first choice? Who's your second choice? And what are the issues that are the most important to you? Now, apparently, what the Ron Paul campaign is doing is then using that data to formulate a strategy to have a second round of calls made by people who are more trained in the issues to come back and call people. So obviously, if somebody says I'm a Ron Paul voter, then great, they don't have to call them, but they want to identify those names and to get out the vote. And so if you identify somebody as a Ron Paul supporter, then they'll be able to make sure they call them and get them to vote. Also, when they say who they support, you're asking them how strong their support is. Are they very strong? Are they soft? And they want to attack the strong people first. So if somebody is Mitt Romney, 100%, never going to change my mind, Mitt's my man, that's not the guy they want to call. They want a guy that says, well, yeah, Mitt Romney, but I just kind of like him because I don't really know too much about, those are the people. So what we're doing is you're gathering information so that they can strategically contact the right people a second time to try to, tilt the people who are either undecided or have lukewarm support for a candidate that isn't Ron Paul, get them to be in Ron Paul's camp. And apparently, if some of the people, if you do want to do a little bit more, I think they are promoting people and giving people different accesses to the system so that you can also get involved in the higher round of calls where you actually start calling people to, help try to persuade them to vote for Ron Paul. But in the meantime, the strategy of identifying the voters, who supports whom, and how strong their support is and what their issues are will help the campaign to better spend their time and resources getting out the votes for Ron Paul and getting people to vote for Ron Paul. So it's definitely a worthwhile effort to join, even if you're only taking data. And, of course, it's very simple. You're just reading a poll and you're connecting the answers. And you just make one phone call. You dial the phone, and it's synced up with your computer. And so when you tell the system that you're finished with the call, it will make another, and it will tell you who you're calling. It will give you the name. It will give you the scripts. It's very, very easy to do. You just need to do it. I mean, the one person, I actually kind of went off script when I called. I wasn't really sure. And the person I started talking to a lady who was a John Huntsman supporter, but she said her support was moderate, because she wasn't even sure. I had to like push her a little bit to get her to mention Huntsman, because initially she wasn't even supporting anybody. And then I got her reluctantly to say, well, I guess John Huntsman. So obviously that's a guy that can be persuaded. But anyway, I'll try to do a little bit more of it. But I'd rather get involved personally. I'd rather talk to the people about why they should vote for Ron. I don't know that I want to spend my time on the survey part. I'd rather do some of the other calls. But still, hey, somebody's got to do these surveys, so let's get them done, because this is, as I said, this is a tight race going on. And the fact that Ron Paul is number 2 in both of these early primaries, nobody else is doing that. He's not number 1 in either one. But Mitt Romney is number 1 in New Hampshire, but he's number 3 or 4 in Iowa. And Herman Cain is number 1 in Iowa, but he's 3 or 4 in New Hampshire. Ron Paul is the only one that's number 2 in both of those surveys. And, I think this new negative information about Newt Gingrich is going to derail some of the steam in the Newt Gingrich locomotive. In fact, I think there could be I can see some really good negative ads about Newt Gingrich being on the payroll of Fannie and Freddie and kind of tying Newt Gingrich's image in with Barney Frank and Chris Dodd. They were all on the payroll of Freddie Mac. So I think that's going to be a game changer. Anyway, let us go back to the phones. Next up is Tony calling from Las Vegas, Nevada. Tony, welcome to the show. Is Tony there? I'm not hearing anything from Tony. I don't know. We're having a lot of problems with these phones today. I guess that was even a follow-up. I forgot I had Tony online, but let me try going to Tim. Tim in Chicago, are you there?
You bet I am, Peter.
Hey, Tim, how are you? I hear you.
Real good. Good. Good to be talking to you. Listening to your guest there, I'd run into MMTers before, just popped online and did a little looking around. I found something interesting because I heard him during his discussion always going back to an analogy of like a poker game and the dealer keeping score and analogizing that to the role of the Federal Reserve and the central bank, et cetera, et cetera. Well, I found an interesting counter-analogy, which is, okay, you're at a casino, people are playing, for instance, poker, and you have a dealer there, and the dealer is keeping score. If the players start to feel that the dealer is dealing with them dishonestly, maybe they'll go play a different game.
Yeah, I think basically, I mean, the way a poker analogy would work is let's assume that everybody's, got chips, and everybody gives the dealer. Let's say you're playing this is not a Vegas, but let's say you're playing poker with your buddies, and somebody is the house, and somebody has got the chips, and of course people are buying in and putting money in, and they're getting chips, and as long as they think the chips are backed by real money, people are going to keep playing. But if the banker keeps putting more chips into the game, even though nobody is buying into them, and all of a sudden the supply of chips keeps growing and growing and growing, but you can't cash out because there's no money behind them, pretty soon people are going to realize that it's a scam, and the whole game is going to blow up the minute they realize they can't cash out their winnings.
I know. The whole edifice of MMT theory just seems to be based on this fantastical idea that just runs so counter to sort of the rock-solid inductive and deductive reasoning of Austrianism.
Yeah, and of course, his point was that we're never going to run out of money. Yeah, we will. Of course, we don't run out of money. I mean, Zimbabwe didn't run out of money. That wasn't the problem, right? I mean, but they ran out of purchasing power. And if you keep printing money, that is what happens. I mean, that's why I don't want to be on a fiat system, because somebody might actually do what Warren Mosler is suggesting. The reason you want to be on a gold standard is to make sure that never happens.
Exactly. Sometimes I tell people that having a high-powered brain is like having a high-powered car. And sometimes it can only mean you drive off the cliff that much faster.
Yeah, because I think he's a smart guy. He's just unfortunately, he drove off the edge of a cliff.
With his very fast engine.
And he was smart enough to get to the Virgin Islands to avoid all his income taxes. So.
Yes, but yeah.
And again, I don't fault them for that. I mean, I said I was thinking about trying to join them. We should all join them down there in the Virgin. I wish we could have that Virgin Islands tax plan for everybody in America, not just the Virgin Islands. But of course, the only way we can have that tax plan is if we have a lot less government. That's what. If you want less taxes, you need less government. That is the bottom line. There is no free lunch. We can't have less taxes and the same amount of government and expect we can print our money to pay for it and everything is going to be fine.
Mm-hmm. You got it, Peter. Well, it's been real good.
All right. Well, thanks, Tim. Thanks for the call. We'll move along. Again, we got more open lines, 855-4-SCHIFF. I know a few people had dropped out earlier. If they want to try to call back, they got a shot for the final segment coming up, 855-4-SCHIFF. Meantime, Steve is on the line from Massachusetts. Steve, welcome to the show.
Hey, Peter. Nice to talk to you. I think the best response we can make to Obama at this moment, because, he's accused the corporations of hoarding cash, calling us lazy, is to say, wait a minute, it's 100% the fault of government that we're not a more business-friendly country. In fact, we're not even in the top 10. It used to be that the business of America was business. Remember, they said that back in the day. But I think the politicians need to be challenged to hold hearings or whatever to find out how we can be even competitive with Canada or Australia.
Well, look, we don't need hearings. This stuff, I mean, I hate it when they have hearings. That's usually just an excuse to delay a decision, to not do anything. And then, of course, the hearings are all phony because they're stacked with the people that they want to be there to, rubber stamp their preconceived conclusions, which are always that we need more government. So if the government convened a committee to figure out how we can help the economy, the committee would come back with, well, we need more regulations. We need bigger government agencies. We need more spending. I mean, we don't want more committees. We want action.
Peter, we want hearings if you're going to testify.
But that's the problem. I ain't going to testify. The people who are going to testify, yes. Now, I did get to go one time, but that was a subcommittee. I'm sure if there was an actual, committee held that was going to try to be substantive or something about what to do, I probably couldn't even get a seat in the room, let alone testify there. But, no, I mean, what we need is action. And it's not rocket science. I mean, all they have to do is undo everything they've done. Right? It's the simplest thing. It's like the George Costanza, fiscal and monetary policy. Just take everything they've done and do the opposite. So if they pass the law, repeal it. right? Just undo all the things that they've done, and the economy is going to prosper. Of course, a lot of that means that we have to undo the spending. So if we had a new program that spends money, we got to abolish that program and stop spending that money. Anyway, I don't know if you got anything more, you can hang on. We got a break coming up. We'll be back for the final segment on the Peter Schiff Show, so stick around.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
And this is Peter Schiff here at SchiffRadio.com. The final segment of the 2 hours has gone by pretty quickly. Hey, before I forget, I will be a guest on the Huckabee Show on Fox News over the weekend. I'm taping it. I forget what time it airs, but it airs both Saturday and Sunday evening on the Fox News network. So if you set your DVD recorders or whatever you got, or watch it live, I will be on this weekend on the Huckabee Show on Fox News. Anyway, let me go back to the telephones. Next up, or I guess I was already talking with Steve in Massachusetts. Steve, welcome back.
Okay. Hi, Peter. One more thing. What I'd like to do is issue a challenge to any reporters listening to your show to confront Obama with a list of the top 10 most business-friendly countries in the world and say, how come we're not number one, and what is he doing to make us improve on the list and be number one? Because he can't pass the buck to business. Business has zero to do with how business-friendly a country we are. And he always wants to pass the buck to business, to say corporations are hoarding, we're lazy, all that. But he can't do it if we frame it that way.
Yeah, of course. And, of course, corporations, they're in business to make a profit. So the shareholders of corporations aren't buying stock so that their corporations will hoard the money, right? So if corporations have cash and they are not investing it, the question has to be why? Because they're not just hoarding it. I mean, that's not why they have it. If they see an opportunity to make money, they are going to act upon it. And if they're not seeing that opportunity, instead of trying to force the issue, what the president should be asking is why? What is the problem? What is preventing corporations that only exist to make a profit? What is preventing them from investing their retained earnings? And he might find the answers. But the thing is, I don't know, maybe he doesn't want to know those answers. Maybe that's the problem. He won't like what he finds. It makes me think of Charlton Heston in Planet of the Apes, Don't go marching down that beach. You might not like what you find. I mean, he doesn't want to find that the reason that corporations aren't investing is because of all the regulations and all the taxes being imposed by the government. And not only the taxes and the regulations that already exist, but given the way the pendulum is swinging, given the frame of mind of the people in Washington, not only are businesses afraid of today's regulations and taxes, but they're petrified about tomorrow's. What's amazing is that corporations have any cash. They should have it all in gold. And maybe one day that's what they'll do. They'll just simply take whatever cash they have and buy gold. That's when it's all over with, right? That's when we've really got the end, when they refuse to hoard even cash because they're afraid of that, and they want to buy gold. Huh?
That's a great point. They should say, sorry, we're going to start hoarding gold. Will you feel better now? Yeah.
Yeah, I don't, because I think hoarding cash is the wrong thing to do. I think you're going to lose a lot of money if you're hoarding dollars. Now, of course, some of the corporations have their money offshore, in which case they may have it in foreign currencies. I don't know. I mean, it could be in dollars or it could be in some of these other currencies. But, nobody just miserly holds on to their money, because they want to hurt the economy. I mean, there's no conspiracy on the part of corporations. I mean, they want to make a profit, and if they could do it, they would.
Yeah, and as an author, the importance of words and language. By using hoarding, he's taking a backhand swipe at corporations by using a bad connotative term. It's sort of a negative swipe.
Yeah, and he's trying to create the argument that they have some kind of patriotic duty to spend this money or invest this money, even if they don't see profit at the end of it. They just got to do it. That somehow it's a natural resource that belongs to the public, and they need to go out there and spend it. No, businesses, they owe a duty to their shareholders, and that's it. And they have to make a profit. And, if the government was out of the way, they could make a profit. That's the point. If the government stopped all the regulating and stopped all the taxing and let the economy restructure through market forces, then there'd be plenty of profit opportunities, and businesses would avail themselves of them. And in so doing, they would employ workers and, create jobs, create tax revenue. They would do all the things that Obama wants them to do. The reason they can't do it is because he's stopping them. And it's not just him, it's all of his buddies in Washington.
That's true. And I think that's right. He's bringing on a question of morality. It seems like liberals always want to introduce a morality dimension to economics and skew it, saying capitalism is immoral because some are poor.
Well, it's their own version of morality. Their version of morality is stealing from one person and giving to somebody else under the guise of the fact that the person they're giving the money to needs it more than the person who earned it. But that's not moral. That's theft. I mean, there's a difference between somebody voluntarily helping somebody else because they want to, somebody taking some of the money that they earned and that is rightfully theirs, and then giving it to somebody who's less fortunate, which I am all in favor of, private charity. That's moral. What's immoral is putting a gun to somebody's head and saying, hey, you got too much, he doesn't have enough, I'm going to take from you and give to him. And especially when the guy who's committing the crime, who's mugging somebody, is saying, oh, by the way, I'm going to take $1 from you, but I'm only going to give 10 cents to the guy who needs it. The other 90 cents I'm going to keep for myself. That's the most immoral system of all. And, of course, that's the system we got.
Exactly. And the further immorality that it does no good because it creates a lazy, entitled recipient who's just a free rider.
Oh, of course, yes. It diminishes the incentives of both people. It diminishes the incentives of the people you take the money from, and it diminishes the incentives of the people you give the money to. It screws it up on both sides.
Yeah. And it's stealing the time. The days worked in the week are gone because the money, the wages you get represent your time. Then when you put your money in the bank, inflation taxes it again by reducing its purchasing power, so you lose more days of the week, in effect.
Absolutely. Look, there is legitimate purpose of taxation. If taxation is for the general welfare of the United States, the common defense of the United States, it's legitimate taxation. When the government taxes one person for the specific welfare of somebody else, when it's taking from Peter to pay Paul, it's not taxation, it's theft. And I don't care how you label it, just because you do it under the color of law with the protection of the state, and just because people are voting for the criminals doesn't make it any less the crime. Anyway, that's it for today's show. We got another show coming up tomorrow. We got 2 more hours of the Peter Schiff Show here on SchiffRadio.com. Don't forget to tune in to the gold standard in talk radio. Bye for now, everyone.